Tax is one of the main sources of income for governments to fund public services and generate revenue. Different countries offer different tax rates. Some implement high rates, while others levy very low to zero tax rates and generate their revenue from other means. Many individuals and companies of high taxing countries look for jurisdictions where they are taxed less. So in this video, we've listed 15 of the best jurisdictions offering the lowest to zero tax burdens. All of these places are ranked according to leniency and perceptions. The top are ranked full-scale tax havens where individuals and businesses face no tax obligations, while the bottom are those with the lowest tax system in the world. At first, these places might sound appealing to those seeking to minimize their tax burdens. However, there are several things to be considered when choosing a low-tax state, such as the general lifestyle and the availability of residency. So it's always a must to do in-depth research and audit before making a solid decision. Plus, laws and regulations can change over time, so it's crucial to consult with tax professionals and legal experts who are knowledgeable about the current tax environment. Number 15. Uruguay. Situated idyllically between Brazil, Argentina, and the Atlantic Ocean, Uruguay is the most politically stable and safest country in South America. Although it might not be the first country that comes to mind when thinking about being a tax resident. But with its tolerant territorial tax system, foreign residents don't need to report income earned outside of the country. This includes rental income, capital gains, a retirement pension, and social security payments. But bear in mind, there are a couple of exceptions on its territorial taxation. It usually applies to financial instruments such as interest and dividends. That too at a flat 12%. Historically, the country has also maintained strict banking privacy laws, although international pressure has led to some changes. But better yet, it still offers a great level of financial privacy. Number 14. Mauritius. In the past, Mauritius was a full-fledged tax haven. It frequently used to position itself as a low-tax jurisdiction of choice for international businesses investing in Africa and Asia. But nowadays, due to the sheer global pressure, it has taken steps to align its tax practices with international standards to address concerns related to tax evasion and money laundering. However, the new and reformed implemented taxes are not very high, and the country has a vast network of double taxation avoidance treaties. On top of this, it does not levy capital gains tax, making it attractive for individuals and businesses looking to invest or dispose of assets without incurring liabilities. Furthermore, it offers a low corporate income tax rate of 15% on profits for most companies. Although there are certain sectors and activities that may be subject to very low taxation, another plus point of Mauritius is the ease of opening a bank account. Any non-resident can easily open a bank account, even those holding just a tourist visa. Number 13. Panama. Just like Uruguay, Panama also operates on a territorial tax system, which means that taxes are primarily levied on income generated within the country's borders. Foreign source income is not subject to Panamanian income tax. While the income generated within the country is also not heavily taxed thanks to its progressive personal income tax system with rates ranging from 0 to 20%. It's also known for its offshore services, including offshore banking and corporations, which can provide privacy and tax planning opportunities for individuals and businesses. In addition, offshore companies incorporated in Panama and the owners of the companies are exempt from any corporate taxes, withholding taxes, income tax, capital gains tax, local taxes, and estate or inheritance taxes. Lastly, it offers various residency and retirement programs, such as the Pensional Visa and the Friendly Nations Visa, which enables retirees and expatriates to reside tax-free. Number 12. The UAE. Almost all of the Arab Gulf states like Saudi Arabia, Qatar, Bahrain, and Oman levy the lowest tax burdens on their residents, and the United Arab Emirates is no exception. It's always been the most favored spot out of all the GCC countries among expats and corporations looking to reduce their taxes. Individuals, both citizens and residents, do not pay any income tax whatsoever. They're also exempt from taxes on interest, dividends, wealth, luxury, inheritance, gifts, and capital gains. Moreover, foreigners holding a residence visa do not pay pension or social security tax, so retirement income can stretch long here. On the downside, the country has recently introduced a corporate tax at a flat 9% rate, but this only applies to those companies earning more than $105,000 a year. In addition, everything related to petroleum and the tourism industry is heavily taxed here, as both of these are the major sources of its revenue. Number 11. Grenada. An island country in the Caribbean region, Grenada boasts a stunning natural landscape and a robust economic infrastructure. The country has a developing real estate market and offers attractive tax benefits to investors. There are no taxes on inheritance and capital gains in the country. Income tax is payable only if the income is derived from a source in Grenada. However, Grenadian companies are obligated to pay corporate tax at 28% with a value-added tax at a standard rate of 15%. So for that reason, this island isn't considered a full-fledged tax haven, as there are many other alternatives for investors to establish companies in the Caribbean. On the flip side, there are no major cons for individuals to establish a tax residency here, unless they opt to open a company or earn income from the country. Number 10. Turks and Caicos. An archipelago of approximately 40 islands just southeast of the Bahamas, the Turks and Caicos is a British overseas territory. But despite this, the territory is self-governing, with its government overseeing foreign affairs and offshore finances. With no income tax and no annual real estate tax or corporation tax, the structures in place are very beneficial for those seeking a tax residency. Moreover, the jurisdiction does not impose corporate income tax on businesses operating within its borders, so this zero tax regime is beneficial for both individuals and corporations alike. But bear in mind, obtaining tax residency in this jurisdiction isn't easy. Applicants must invest a hefty amount exceeding $300,000 and spend at least 6 months in the territory. Number 9. The British Virgin Islands. Yet another overseas territory of the United Kingdom, the BVI are a set of 60 islands and cays in the Caribbean Sea, with their own government and constitution. Unlike the neighboring U.S. Virgin Islands, the BVI are very tax-friendly. In fact, its whole economy is primarily based on financial services, tourism, and offshore business activities. It also has a tradition of maintaining strict confidentiality for financial and business transactions, although it's important to note that while the BVI offers tax advantages, it also has implemented various international tax transparency and anti-money laundering measures to comply with global standards. These measures may require increased reporting and transparency for financial institutions and businesses. Number 8. Antigua and Barbuda. One of the wealthiest nations in the Caribbean, Antigua and Barbuda are a set of twin islands located in the Lesser Antilles. Out of both islands, Antigua is more mainstream with a plethora of investment options, while Barbuda is known for its tourism and beaches. It imposes no taxes on personal income, inheritance, real estate, and capital gains. It's also one of the least expensive countries to get citizenship by investment in the Caribbean. Most applicants can avail its passport with a fixed donation in its National Development Fund amounting to $100,000. This makes it a perfect all-rounder for those looking to settle in a cheap and efficient offshore financial structure. As an added bonus, it's a beautiful island nation with high living standards, a relaxed atmosphere, pristine beaches with well-developed infrastructure. Number 7. St. Kitts and Nevis. Another dual-island Caribbean country known for its natural beauty and rich cultural history, St. Kitts and Nevis' allure extends from its pristine beaches, tropical landscapes, and diverse cultural influences. Just like the neighboring islands, it also offers hosts of citizenship by investment program. Many investors choose to obtain its passport not just for the enhanced travel and mobility it offers, but to gain its tax residency as well. This provides high net worth individuals with the flexibility and freedom to safeguard their wealth. The rates for both individuals and corporations are among the most liberal worldwide, as there is no income tax for individuals nor inheritance, duty, capital gains, or corporation tax. Though beware, natively operating companies pay a corporate tax at a rate of whopping 33%, but foreign offshore structures that earn profits from outside of the country are exempt from any sort of income tax. Number 6. French Polynesia. An overseas collectivity of France located in the South Pacific Ocean, the French Polynesia is made up of more than 100 islands and atolls, with Bora Bora and Tahiti being some of the most popular destinations within the archipelago. Tourism in particular plays a significant role in the local economy, with visitors attracted to the island's natural beauty, culture, and resort-related activities. For many, the idea of tax residency in this territory might seem absurd, as it mostly operates on French tax laws and regulations. But many affluent investors from the EU and Oceania still avail the perks on offer. Unlike mainland France, its tax system is characterized by no income taxes on individuals, no wealth taxes, and no inheritance taxes. Plus, new businesses are tax exempt for their first 12 months of operation. Number 5. Qatar. One of the region's most oil-rich states, Qatar offers a stable and business-friendly environment with modern infrastructure, economic diversification efforts, and a strategic location in the Middle East. The country does not impose tax on personal income, capital gains, inheritance, and property. In addition to this, there is currently no value-added tax to pay either, while for businesses and companies, there's a flat rate of 10% if the income is sourced locally. Although it might offer good tax options, but those hailing from the Western world still face disadvantages in other ways, be it political or social. And unlike Dubai, non-citizens are expected to adhere by the cultural dress code when visiting general public places. But nowadays, many restrictive laws are being changed as the country aims to attract international tourism, just like the UAE. To aid in this, it's introduced various residency programs, such as the Qatar Permanent Residency Permit and the Qatar Gold Visa. Number 4. Bermuda. Located in the North Atlantic Ocean, the British Overseas Territory of Bermuda is another ideal jurisdiction for tax optimization. Its independent and free government does not impose personal income tax, inheritance tax, capital gains tax, and even corporate tax. While there is a payroll tax on employee salaries and a business land tax, the overall tax burden on businesses is relatively low compared to many other jurisdictions. To become its tax resident, the applicant must avail one of its residency programs, such as the Bermuda Permanent Residency Certificate or the Bermuda Global Citizen Program. The requirements of both these programs include investing a hefty sum in the territory or proving a substantial amount of income from elsewhere. Number 3. Anguilla. Situated in the northern part of the Leeward Islands, about 10 miles north of the island of St. Martin, Anguilla operates in the same way as Bermuda and does not impose income, capital gains, corporate, or any other taxes. But it is not a desiring places for individuals to become a tax resident. The main reason for that is its remoteness and a very small size of just 100 square kilometers. Aside from that, natural disasters are rampant here, with hurricanes and tropical storms being the biggest concerns. The only people who benefit from this tax regime are those who incorporate an offshore company on this island. Number 2. Cayman Islands. Yet another British overseas territory, the Cayman Islands have become one of the more prominent tax havens. Despite a population of just over 65,000, more than 150,000 companies are established in this territory. These include the American Depository Receipts, or holding companies, that make it possible for Russian and China-based operations to trade on U.S. stock exchanges. Additionally, residing here provides access to exceptional standards across various aspects, including healthcare, education, infrastructure, and the pristine preservation of natural surroundings. Number 1. The Bahamas. This is one of the most popular destinations for all, be it retirees, expats, companies, and even North American tourists. With its crystal clear ocean, bright sunshine, and fine sand beaches, it's a paradise in its own right. It has the lightest tax policies in the world, with the government not enforcing income, sales, gifts, estate, or capital gains taxes. These easygoing tax policies invite investors, business owners, and wealthy individuals, which contributes to a stable local economy. The Bahamas is one of the more visa-friendly countries, offering options to get permanent residency after just a couple of years. Moreover, their banks are the perfect definition of discreet, reputed for their lack of transparency and privacy when it comes to sharing information. On the contrary, the cost of living and accommodation on this island is very expensive, so only affluent individuals can afford to live here.